And the RBI's somewhat surprise decision to cut the CRR by 50 basis points on Monday had helped ease the pressure on money markets on Tuesday. But bankers say that cash continues to be in short supply and that RBI action might not be enough to swing it. So even though the CRR has been cut, don't expect for a moment that the interest rates on your loans are headed south. That's advice coming from one of the country's most influential bankers, Kamath of ICICI Bank.
RBI Governor Dr. D. Subbarao may have helped reduce the pressure on banks, but help for the common man is still a while away. Despite the cut in the cash reserve ratio, retail lending rates, including home loan rates, will not drop immediately.
We'll have to wait for that. I think it's a bit premature at this point in time to talk of interest rates.
India's largest private sector bank, ICICI, says that unless the RBI points towards a cut in its benchmark repo rate, banks are unlikely to reduce rates for consumers. And as inflation control remains a priority, a drop in rates may not be forthcoming. The first reduction in CRR in over 5 years shows an increased willingness on part of the regulators to walk the tightrope between inflation and growth. But bankers say lending rates will not come down anytime soon. Credit demand is already growing above target at 26%, and banks expect this trend to continue.
Credit expansion normally takes place more in the second half. So this is the time when most of the sectors like agriculture or SME and retail all will come into their requirements will go up, especially now since festival season.
High interest rates are here to stay, especially as external sources of funds continue to dry up. But banks are keeping a close eye on the RBI's credit policy review on the 24th of this month. With Ragini Verma in Mumbai, in New Delhi, Haris Usman for NDTV.